Hello everyone, welcome to this price action breakdown on EU. In this video, I'll be breaking down last week's price action, and along with that, I'll also be going over the trades that I executed this past week. I'll be explaining the thought processes behind them, how did I determine and establish the directional bias for each trade, and what was the market context and how I identified the market context behind those trades, and how did the execution process look like. Okay, that's going to be my objective for this chapter. So without a further ado, let's just get into the details. Now I'm going to be breaking down all of this price action using the same access framework that I taught you in chapter 2. Okay, so first of all, I'll start with the daily time frame, and on this time frame I'll show you how I determined my directional bias and what was the rationale there. Now remember, within the access system we are meant to use all of the higher time frame for determining a directional bias, like the monthly, the weekly, and the daily time frame. Okay, we are meant to use all of these time frames to determine a directional bias. But since I haven't yet uploaded the top-down analysis chapter, which includes the refinement process for refining down the analysis from the monthly down to the daily, okay, since I haven't yet uploaded that framework or that process, or haven't taught you that, therefore I'll just stick to the daily time frame for now and use this time frame to show you how I reached a conclusion regarding the directional bias for the past week as a whole, and then each day separately. Okay, let's do this. So first of all, if you watch chapter 2, then you know that we have two steps or two components for determining a directional bias. The first step is determining a directional idea. Okay, the first step is determining or building a directional idea through the concepts within the structure component. And then the second step is building a directional bias. The second step is building a directional bias from that idea through the concepts within the narrative component. Okay, the first step is building a directional idea, and then the next step is to establish a bias from that idea using the concepts within this component. Okay, so let's see how I did that. So the way I build a directional idea for the higher time frame is, first of all, I looked at the structure and determined the underlying structure that the market is moving in, and I did that using the ideas of market structure. What you can see on the chart is that after we took out this low, after we took out this major low right here, after that we then had a structural shift to the downside after we broke below this low. Now the reason this structural shift is valid is because first of all, the first factor is that we broke below a significant or a key low. Now the reason this low is a key low is because it led to this high being broken, and once we broke above this high and took out the liquidity above this high, we then had a structural shift where price broke below this low, and this is a key low. So now this would be regarded, this structural shift would be regarded as a valid one. But obviously that's not the only reason here. The second reason here is that we had an SMT with GU. Okay, you can see that EU took out this high. Let me show you. EU took out this high, but GU failed to do so, and that led to this non-symmetrical price action between the two correlating assets, and that non-symmetry led to this divergence between them. So because of this divergence and because of this low being a significant one, this structural shift was considered a valid one. Another major factor here is that we tested a high time frame key level. Okay, there are a lot of other factors here as well that led to this structural shift being considered a valid one or a key one, but since I haven't yet uploaded the top-down analysis chapter, I'm just going to leave that for now. But remember, the three main factors here is, first of all, this is a keto. We have an SMT divergence with GU. We have a monthly CRT. And along with that, we also tested a premium key level. And because of all of those factors, when we had this structural shift, that was considered a valid one. And from this point on, we then shifted into a bearish trend. Okay. From this point on, we then started a bearish trend and we started moving in an underlying bearish directional trend. So now based on market structure, the directional idea is bearish. We're expecting price to have bearish price action. The second step now is to refine this directional idea based on market profiles. And what you can see here is that after this structural shift, we then had a retracement profile. With this retracement profile, we filled internal range liquidity. Then we had another expansion profile lower. After this expansion profile, we then had another retracement. And now that this retracement has completed, our anticipation and expectation for price is now to have another expansion profile lower. So based on market profiles, we've refined this idea down to this conclusion that the market is going to have a bearish expansion. The market is going to have what? It's going to have a bearish expansion. We determined this element based on market structure, and we determined that it's going to have an expansion based on market profiles. Okay, so now let me just quickly summarize this. The directional idea is bearish, and we are expecting, or you could say that our anticipation for price is to have a bearish expansion lower. Okay, now that being said, we know that price is expected to have a bearish expansion profile lower, but now the important thing here is to determine where that expansion swing is going to originate from, and then where is it going to end, meaning we have to figure out the origin and the destination for price. Okay, and these two elements, or these two key aspects, are more important than the structural directional idea that we've built. Okay, are we going to have an expansion straight away from here, or are we going to first of all maybe rebalance a dealing range and then have an expansion, or are we going to take out this high and then have an expansion? Okay, we can have multiple scenarios, and now our job is to determine which scenario is more likely to play out. And how are we going to do that? If you watch chapter 2, then you know that this is done. We establish that, or we determine that with the help of what? With the help of the second component, or the second step, which is the narrative component. We do that through the narrative component. Okay, so now I'm going to use the ideas within the narrative component and help you understand how I established a directional bias from that bearish directional idea that we built earlier, and how did I reach the conclusion regarding that. Okay, so first of all, the first step within the narrative component is to identify, the current and the most relevant dealing range relative to the price action of this month. Okay, the first step is to identify the most relevant and the current dealing range. So first of all, right here you can see that the most recent expansion swing that we had is this expansion profile lower. Now this expansion swing has been my dealing range for the past 2 weeks. Okay, and 2 weeks ago when price was right around here, my directional bias for this week was bullish. Now, even though the directional idea was bearish because the market is moving in an underlying bearish trend, I still expected bullish price action because of this dealing range. Okay, this week, regardless of the bearish structural idea, I was bullish because we had formed this new dealing range and I expected price to have a bullish uh, retracement lower so that we could rebalance this dealing range, reach a premium key level, and then have another expansion profile lower. Okay, now first of all, let me just quickly define how this expansion swing was a dealing range for me and what led me to believe that or expect that. The first thing that you can see here is that we've got this high, and this high is a significant high because not only it tested a higher time frame key level in the form of this order block and in the form of a weekly order block, but also this high led to this low being broken. Okay, this high led to this low being broken to the downside. So this high in practice became a significant high or a key high. Now obviously in order to define a dealing range, we also need a significant low. Okay, we also need a significant low before we could define a dealing range, right? And the significant low we have in this case is this low. And the reason and the logic behind this low being a key low or a significant low is that not only it reacted to a key level in the form of taking out this low, or you could say it purged liquidity, but along with that, we also had an SMT with DXY. What happened is that DXY took out this low, took out the corresponding high to this low, but EU failed to do so. And because of this factor and this factor, I established and I determined that we've now formed this dealing range. Now again, these two reasons were not the only ones that led to this low being considered a key one and me defining this expansion swing into dealing range. We also had another lower time frame confirmation as well on the 4-hour, which finally confirmed it for me, okay, which I'll talk about later. But that 4-hour confirmation was the final nail in the coffin for me. And the reason I'm saying this is that even when we were here, right around here, my directional bias was bearish. Okay, and I expected price to have a bearish range expansion profile lower, but it only turned bullish once we had a confirmation on the 4-hour and we closed bullish on Tuesday right around here. From this point on, I established that we have now found a new dealing range, and now the main priority for price is to first rebalance this dealing range, reach a key level, a premium key level, and then once we've done that, then my bias will shift to bearish, and that is exactly what price did. Okay, you can see that after this dealing range was formed, what price did is that it then retraced higher, had a retracement profile higher. With this retracement profile, it tested this premium key level in the form of this premium order block. It also had an SMT with GU, okay, and then we confirmed the high here with this candle range, and then we validated this candle range in the SMT with a 4-hour structural shift that happened here. And from that point on, I then started expecting price to have a bearish range expansion profile lower. Okay, that is what happened in the last 2 to 3 weeks. Now that we've discussed that, now let's talk about last week and how did I establish the directional bias for this week, for last week, because this one is a bit more interesting and has a lot more nuance than what you'd expect. Okay, so first of all, last week opened right here. Okay, it opened right here. Now you know that we already know that the underlying trend is obviously bearish. Okay, the market is moving in underlying bearish trend. We've already figured that out. Okay, the next thing that I had to determine for last week, sorry, was to determine the origin and the destination for price, meaning I had to figure out the narrative part and establish a directional bias for the week and then each day separately based on that logic. Now the destination is super clear, which is obviously the low of this dealing range or this external range liquidity. Okay, we had filled internal range liquidity, so now obviously the destination based on this dealing range is super clear. It is this low. But the more important element than that is the origin for the bearish expansion profile or the bearish expansion swing that we could potentially have this week. And to do that, again, we will first of all define the current and the most recent and the most relevant dealing range that we have. Okay, now we could have three scenarios based on that. The number one scenario is, first of all, let's say we've already, let's say the week opened right here. Okay, this is where the week opened. This is the weekly range we have. The first scenario is that let's say price has already rebalanced the dealing range. We have this dealing range. Let me draw this out for you. We have this dealing range, and you can see that we've already rebalanced this dealing range the previous week. Okay, then in that case, when the next week opens, we'll just expect price to form the high of the week based on the open high low close concept, and once that high is confirmed, then we'll expect price to have a bearish range expansion profile lower. Okay, this is the first scenario that we can have. In this first scenario, we've already rebalanced the dealing range the previous week, so the next week we'll just expect price to form the high of the week at a key level. Let's say we have a key level here, and once that high is formed and it's confirmed and we have a lower time frame confirmation, we'll then expect price to have a range expansion lower. Let me just draw this here. Okay, that is the first scenario. The second scenario is that let's say when the next week starts and opens right here, let's say we formed a new dealing range. Okay, last week we had a range expansion profile lower, we took out external range liquidity, and let's say we formed this new dealing range here. And in this scenario, and in this case, we'll expect price to have, or we will expect price to first of all rebalance this dealing range and this then test a premium key level here, and then once that is done, then our expectation for price will be to have a bearish range expansion profile lower, which was the case in this week right here. Okay, this week we had the second scenario. The third scenario is a bit more interesting than the previous two, and it's also the one that we had this past week, which is that, let me first draw it out for you, the third scenario. Okay, so the third scenario is the one that we had this past week, which is that we've already rebalanced this dealing range. Okay, we've already rebalanced this dealing range last week, and we also tested a premium key level within it. But what happened is that now we formed a micro dealing range on the intermediate time frame. We've already rebalanced this macro dealing range, but now we've formed this micro dealing range on the intermediate time frame, which for us is the 4-hour, within the macro dealing range. We haven't yet reached the low of the dealing range or expanded lower, but now we've formed a new micro dealing range within the macro one on the 4-hour time frame. And in this case, our destination for price remains the same, which is the low of this dealing range, okay, which is the external range liquidity of this dealing range, and it remains the same. But since we formed a new dealing range on the 4 hour, our expectation for price would be to first of all rebalance this micro dealing range, okay? And once we've rebalanced this micro dealing range, tested a premium key level within it, then our expectation for price will be for this week to have a range expansion profile lower. Okay, and this scenario we'll expect this macro range or this macro dealing range to be rebalanced, and once it's rebalanced, then we'll expect or anticipate price to have a bearish range expansion lower. Okay, now let's look at this price action. Let me remove all of this. We have this macro dealing range and we had an SMT divergence. We also tested this premium key level, formed a candle range. Now for this week, the current and the most relevant daily range that we had or that I defined was this expansion move lower. Now on the daily time frame, you'd think that this is not a valid daily range, because even though this high is a significant high because it reacted to a higher time frame key level, okay, this has a significant high, but the low that I've chosen isn't significant because it hasn't yet purged liquidity or broken above any high. Okay, it hasn't done any of that. So how is this low a significant low, or how have I defined or regarded this expansion move as a dealing range? And the answer for that is on the 4 hour time frame. And that answer that I'll show you in just a minute leads to this low being considered a significant one, and due to which we then had a new micro dealing range within the macro one last week. And again, due to which my directional bias for the first few days of last week was bullish, and I expected price to first of all rebalance this dealing range, and based on the open high low close concept, form the high of the week at the premium region of this dealing range and test a key level there. And then from there, I expected it to have a bearish range expansion profile lower. Okay, and the key level that I had in mind, or that I had chosen or identified within this micro dealing range, let me show you, was this daily order block, the mean threshold of this daily order block. This was the key level that I had identified, which I expected price to react to or test or reach before having the range or the bearish range expansion profile lower. Okay, this was the premium key level that I had identified for this week as the key level that price will react to. Okay, now let's move on to the 4 hour time frame, and let me first of all explain to you why I regarded this low as a significant one, and how did I define this expansion move as a dealing range. And then let me walk you through the market context of the trades that I executed. Okay, now let's move on to the 4 hour time frame. Let me remove all of this. So obviously, this is a significant high because this high tested or reacted to higher time frame key level, but you don't know how is this a significant low. Now there are two reasons for why this low is considered a significant low or a key low. The first reason is that this low led to this high being broken above, okay, and the second reason is how price closed last week on Friday. And because of these two reasons, I considered and regarded this low as a significant low and marked out this new micro dealing range. So we had two reasons here. First of all, this low led to price breaking above this high, which was one of the reasons which led me to believe we have now formed this micro dealing range. But that wasn't the only reason here. And the reason I'm saying that to you is even when we had broken above this high, my expectation for price was still to have a bearish range expansion profile lower. At this point, I still hadn't yet defined this micro dealing range, because this low breaking above this high wasn't enough of a reason for me to define this dealing range. And that is why even on Friday during CPI, my expectation for price was still to have a bearish range expansion lower and to continue this trend lower. Okay, I expected price to take out this high and then expand lower, because this wasn't enough of a reason for me. But after that, what happened is price closed above this high. And when price closed above this high and the way how Friday closed, that confirmed to me that now we have a new dealing range. Okay, because of these two reasons, because of price closing above this high and having this structural shift, because of these two reasons, I then defined this new market context for me for the next week. Okay, so for the next week, I had this new dealing range that I had defined. Okay, so my expectation for price at the beginning of the week was bullish, and the drawn liquidity I had in mind was this premium region of this micro dealing range. Okay, for the first half of the week, I expected price to have a bearish, no, not a bearish, a bullish expansion higher, so that we could rebalance this dealing range, reach the premium region, and then from that point on, once we had a proper confirmation, I was then going to expect a bearish expansion lower. So on Monday, my directional bias was bullish. Now the way I framed the trade here is, obviously, first of all, I had to find a candle range and a proper key level. And the key level I had on Monday was this order block. And along with that, we also had this 9 p.m. candle range. I took this 9 p.m. candle as my candle range because it closed just above this order block. And once price purged below this candle range, tested the key level, I then went down to the 15-minute time frame and framed an order block trade there. Okay, and this was a win for me. So this was the first trade of the week. Then by this point, I was done for the day, so I just let price do whatever it wants. Okay, then obviously this price section right here that you can see isn't relevant to me because I don't trade during this time. So I just watch price action and see whether what it does, and then decide what I'm going to do with it once price reaches a kill zone or reaches a key time. On Tuesday, my directional bias for the day was still bullish, and I expected price to take out this high and then have a bearish range expansion profile lower from there. Here I took this as my candle range and expected price to expand higher from there to take out this premium high, but you'd remember that that's not exactly what price did, and it just instead closed lower. Okay, so I had a 3-hour win here and then a 1-hour loss here, minus 1 hour. Then on Wednesday, since I was done by here, I didn't trade at any of this price action because I only take one maximum trade per day. Then on Wednesday, I waited till the kill zones because obviously I only trade during key times and kill zones. So this price action that you see wasn't relevant to me. Then on Wednesday, first of all, I expected price to take out this low. I still had this drawn liquidity in mind. Okay, my short-term drawn liquidity for price was still this premium high, and I expected price to first of all have a bullish range expansion on Wednesday towards this high and then expand lower in the long term towards the macro dealing range. So first of all, I waited for the 1 a.m. candle to close. Okay, and then during the 5 a.m. 4-hour time window, I took this as my candle range, this is my key level, and I took a trade towards the drawn liquidity higher, and as you can see, price expanded higher. Now at this point, I closed my trade at 3 hour Okay, I closed my trade right here at 3R, but we then had an SMT divergence with DXY, and because of this SMT divergence, because of it, let me remove all of this. Because of this divergence, it led me to believe that now we don't have to take out this high. It led me to believe and that now we don't have to take out this high, and now we've finally rebalanced the dealing range completely, and now we can expect price to have a bearish range expansion lower towards the long-term drawn liquidity without taking out this premium key high. And right here, you'd know that I closed my trade at 3R. If you've seen my executions, then you'd know that I closed my trade right here. And then from that point on, we then started a bearish range expansion profile lower. Okay, then on Wednesday, since we had already rebalanced the macro dealing range, my drawn liquidity for Wednesday and the rest of the week then shifted towards the low of the macro dealing range on the daily time frame. That was my next long-term drawn liquidity for price. Okay, and my new directional bias for the rest of the week was bearish. Now, the way I framed my trade on Wednesday is, first of all, regarding the market context on the 4-hour, we have this premium key level in the form of this order block. During the London Open, price was already at this order block, and it had already tested this order block. Okay, then the only thing that I needed was a candle range, and we had this 9 p.m. candle is a candle range, but we didn't purge it because we had an SMT divergence with GU. GU had taken out the high of this candle range, but EU failed to do so. And that was enough of a market context and confirmation for me. So I framed a trade on the 15-minute time frame, and then we expanded lower, as you can see right here. So basically I took 4 trades, 3 are on Monday, -1 on Tuesday, then 3 are on Wednesday, and 3 are on Thursday finally. And that was basically it. That was the whole breakdown of last week price action in the trades that I executed.